So let's talk about investor relations and why now. So what happened within the last couple of years that makes this area so necessary? In short, we'd have to go back at least 2 or 3 years to talk about what was happening during the pandemic, what was happening with the housing market, with interest rates, etc. To simplify this talk, let's say that there is an indirect relationship with interest rates and valuations. In this case, valuations of apartment complexes. A few years ago, the Fannie and Freddie Mac, so those are agency loans, they kind of pulled out of the business of funding loans for multifamily. In their place came a financial instrument called a bridge loan. A bridge loan is essentially exactly what it sounds like. It's a little bridge that kind of closes the gap between when an apartment complex is purchased and when the value add is done to that apartment complex so that they can sell it. What no one expected was what was going to happen with interest rates. Now, the way that a bridge loan is structured, it's structured such that 3 years are fixed at a particular rate, whatever rate that was there when they closed on the deal. And then there's an opportunity to extend that loan basically 2 times. So it's like a 3-1-1 model. 3 years at a fixed interest rate, assuming you purchased a rate cap, and we'll go into that discussion here in a bit. And then also you have the option to extend that loan 2 times. And that's where the 1-1 comes in. A lot of general partners secured a rate cap, which meant that the interest rates couldn't go above that cap. Unfortunately, a lot of general partners did not. Now remember, general partners are essentially stewards of an investor's funds, and that's why there's so much trust that is necessary in order for an investor to even think about investing with a particular general partner. Because a lot of the loans are maturing, because we're coming up on those 3 years, there's a significant amount of communication that needs to happen between a general partner and an investor. Sometimes those communications are good, meaning, hey, we purchased an interest rate cap, we're reserving cash, we're going to be able to purchase another rate cap when the loan matures and be able to extend it. Because right now it doesn't make sense for general partners to sell properties because they would actually end up losing money and not be able to return the profits that were expected by the investors. Now, why does that matter to us? It matters to us because given the industries that we come from, we naturally have been the bearers of bad news sometimes. And as such, we have the ability to find the bright side of a situation or look at things from a glass half full mentality. That's not to say that all of the pressure comes down to us. No, but as advisors, we're able to effectively communicate what it is that the general partner needs to say to an investor and have it have a soft landing. That's not to say that that's something that we're all naturally good at, but it's definitely something that comes with the territory when you're in a consultancy role or you're in a PM role where maybe a project isn't going as planned, maybe we're over budget and not going to meet the timeline. So you see where I'm talking about how our skills are so transferable. At the end of the day, you didn't cause this issue. You did not participate in the acquisition of the loan or the closing of the deal or guaranteeing the loan. Our role is simply to be somewhat of a neutral party and help craft a proper communication or help be their admin if they're going to host a webinar. Make sure that everybody that needs to be there is invited. Make sure that reminders are sent, for example. Those kinds of things that can take the pressure off a general partner. She's going to have to potentially deliver a negative message. Either A, they're going to need more money to keep the project afloat, which sometimes happens, and that's referred to as a capital call. Or B, they're going to have to sell at a loss, which means that 2x your money that you were thinking, maybe it's just your money back. And some investors are glad to hear that. Unfortunately, there are situations, and we want to stay as far away from these situations as possible. And we'll talk more about that on the client onboarding side of the house. But there are going to be some situations where general partners have to tell an investor that they've lost all their funds and a property is going to be foreclosed on. Now, what's in it for you, you ask? I'm glad you asked. The reality is that the real estate industry is somewhat of a stable industry because everyone needs a place to live. And not to mention, many millionaires and billionaires have made their money in real estate. The idea is, as with anything else, just timing the market. So I want you to look at this also as a learning opportunity. Consider what it is that you can learn about this industry and what it is that you could potentially do in the future to potentially grow your wealth once rates stabilize and you become familiar with more of these GPs and terminologies and you yourself become a sophisticated investor. I live by this quote by Zig Ziglar that says, you can have everything in life you want if you'll just help enough other people get what they want. I think that that is so true. And I think that if you have the ability to go in and help a general partner be able to streamline their processes and communicate effectively with an investor, and in turn you get compensated for that and you're learning about a different industry when the tech industry is suffering right now, why not do that? Why not do that?